Good morning. I hope everyone is safe and sound. In today's meeting, we will start the discussion on exclusions from gross income. Specifically, in this session, we will discuss some of the items of gross income which are exempted from income taxation. These items are commonly referred to as the capital items deemed with infinite value. But before we start discussing those items, I will give you 10 seconds to recall our previous topic regarding the three essential elements of gross income. So, what are those three elements of gross income? Yep, you are correct. Number one is, it is a return on capital that increases net worth. The second one is, it is a realized benefit. And the last one is, it is not exempted by law, contract, or treaty. Please take note that these three elements are very important in identifying those items that should be excluded to compute for the taxable income of a certain taxpayer. Moving on with our main topic, at the end of this lecture, you should be able to comprehend mastery of the capital items deemed with infinite value exempt from income taxation. This was actually anchored in the first element, which states that gross income must be a return on capital that increases net worth. So, what is the first example of capital item deemed with infinite value? Anyone? Number one actually is human reputation. I hope you got it right though. The value of one's reputation cannot be measured financially. Any indemnity received as compensation for its impairment is deemed a return of capital exempt from income tax. I hope you have taken note of the terms used. It is a return of capital, not a return on capital. So, what are examples of instances or cases when the human reputation can be impaired? Can you identify some? If not, what is this illustration or picture referring to? It's actually referring to oral defamation or slander. So the common example is oral defamation or slander. It is an act when you say something or disseminate information that impairs or downgrades one's human reputation. An actual case of this one is the case of Miss Ramos in 2017 in Cagayan when she said to her neighbor the following line, quote, unquote, "Ukinam puta awan ad-adal mo," or in English, vulva of your mother, prostitute, illiterate. This strong statement resulted to the plaintiff to sue that person. Since the plaintiff won the case, she had received a certain amount as payment to the impairment of her reputation, and this was exempted from income tax. Another common example is the alienation of affection. As you saw from the screen, it involves the presence of a third party in an established relationship. In such case, the aggravated party, which is the legal wife in our example or in this illustration, can actually sue the mistress for a case involving alienation of affection. Any compensation then for damages involving the alienation is exempt from income tax. So, to those who are actually a third party in an intimate relationship, please stop as soon as possible to avoid being sued for such case. The next item considered as capital item deemed with infinite value is our health. Any compensation received for the loss of health, such as compensation for personal injuries or tortuous acts, are considered return of capital. For example, a compensation received by an employee from his or her own employer for payment of his hospital bills is deemed return of capital, which is exempt from income. The last item deemed with infinite value is our life. The value of human life is immeasurable by money. Under Section 32 of the National Internal Revenue Code, or NIRC, proceeds of life insurance policies paid to the heirs or beneficiaries upon the death of the insured, whether in a single sum or otherwise, are exempt from income tax. Additionally, the proceeds of a life insurance contract collected by an employer as a beneficiary from the life insurance of an officer or any person directly interested with this trade are likewise exempt. For example, Juan de la Cruz purchased a life insurance policy allowing his only heir, Cardo, to receive proceeds of 1 million upon the death of Juan de la Cruz. If unfortunately, the insured person or Juan de la Cruz actually dies, the 1 million proceeds collected by Cardo will be exempt from income tax. Interestingly, in example number 2, if the employer of Juan de la Cruz is the designated beneficiary instead of Cardo, the amount of 1 million proceeds collected by the employer upon his death will also be exempt from income tax. That's all for today's lesson. Your assignment for next meeting's discussion is to identify some of the exceptions to these general rules. For example, what if the insured person outlives the policy? What will happen? Is the amount returned still be exempted or taxable? Also, what if the insured person sold the insurance contract to a third party? Is the proceeds still be exempted from income tax? These are some of the questions that will be answered in our next lecture. Thank you for listening and a pleasant morning to all of you.